Debt market hyperbubble is a monster. It's a Frankenstein on an epic scale, and it's continually being fueled by runaway central banks here, and they must continue to fuel it to maintain the current environment. But eventually, this is going to implode by design. This hyperbubble in debt is no accident. This isn't a comedy of errors that got us here. All right. Eventually, we are going to get this bubble is going to implode, and the ramifications of that are going to send a ripple effect around the world, through the world, and into outer space. That's how intense it's going to be. A meltdown in that debt market is a guarantee, which is going to crush stock markets around the world. And cash, I always tell you, it doesn't fly away to money heaven. It just moves from one reality into another. In my opinion, it's going to go into commodities, extremely suppressed ones like these, and other assets as well here.
Market trader Gregory Mannarino advocates investing in tangible assets like gold and silver to safeguard against currency devaluation and inflation. These assets, he argues, have demonstrated their ability to retain value over millennia, unlike fiat currencies, which are subject to devaluation over time. Over the past 23 years, gold and silver have experienced periods of underperformance and outperformance relative to the inflation rate. However, both precious metals have proven effective hedges against price inflation over the entire period. It's worth noting that silver has lagged behind gold and inflation since 2013. The rate of increase in the M2 money supply since 2011 has outpaced the rise in the prices of gold and silver. This suggests that gold and silver may be undervalued relative to the supply of dollars when priced in dollars. Expressing concerns about the debt market bubble, Mannarino predicts that its eventual burst will have severe consequences, potentially leading to stock market crashes and a shift of capital into commodities and other assets. The Congressional Budget Office has also issued warnings about the rising debt, highlighting significant risks to the U.S. economic outlook in the coming years. The debt-to-GDP ratio is projected to reach record levels, with estimates indicating a rise to 107% in 2029 and a staggering 166% by 2054. Former President Donald J. Trump, who promised to eliminate the national debt within 8 years during his 2016 campaign, oversaw a widening budget deficit while in office. He has since promised further tax cuts if re-elected. Mannarino foresees widespread social unrest and chaos in the streets on a global scale when the debt market bubble eventually implodes, underscoring the potentially dire consequences of the current fiscal trajectory. Join us as we delve into insights shared by Gregory Mannarino. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
Central banks are the enemy. Central banks have been in a race to the bottom forever now. Who can devalue their currency faster? And it's an incredible thing that people don't understand what they're seeing here. Oh, we're funding this and we're funding that. And why are we doing this? It's all to keep the mechanism going here, because it must exponentially increase the funding for whatever they want to throw at it, because that's how the system functions. Because without that, this whole thing turns back into Mad Max. People need to get out of a central bank note. I don't know another way to put it here. As many central bank notes around as you need, because you must participate in their system. Convert that into other things. If we understand, it should be very simple, that central banks must and will inflate. Period. They're going to devalue the currency further and pay people nothing with regard to interest earning accounts, weighed against the actual rate of inflation. It's thievery on an insane scale, but still people are fixated about the king dollar and they want to be you got to be nuts here. Convert that into an asset, like these are gold and silver pieces here, that have been money for thousands and thousands and thousands of years. Here, eventually, look, people see these things not moving around too much, but what these are insurance policies in many, many ways. These are real money. And eventually we're going to get an implosion. And you know this because I've covered it a gazillion times for 10 freaking years already now. The debt market hyperbubble is a monster. It's a Frankenstein on an epic scale. And it's continually being fueled by runaway central banks here. And they must continue to fuel it to maintain the current environment. But eventually this is going to implode by design. This hyperbubble in debt is no accident. This isn't a comedy of errors that got us here. All right. Eventually, we are going to get this bubble is going to implode, and the ramifications of that are going to send a ripple effect around the world, through the world, and into outer space. That's how intense it's going to be. A meltdown in that debt market is a guarantee, which is going to crush stock markets around the world. And cash, I always tell you, it doesn't fly away to money heaven. It just moves from one reality into another. In my opinion, it's going to go into commodities, extremely suppressed ones like these, and other assets as well. Here, people do not understand how cash moves through the markets. You have to understand the environment being maintained right now is risk on. Henceforth, why we're seeing record high with the stock market. Meanwhile, the economy is in free fall. Last year, I told everyone, the faster the economy craters, the higher the stock market is going to go. Oh, Greg, you don't know what you're talking about. Oh, can't. Boom. Well, how about this year? I also told people at the end of last year watch what was going to happen with regard to corporate layoffs. I said it was going to go crazy. We got tens of thousands of people being laid off. Corporations making announcements every day. They're laying more people. If that's because our economy is so strong, no. People are being lied to. What did Biden say the other day at the State of the Union? Our economy is the envy of the world. You got to be kidding me. Sure, maybe for the 1% and 2%ers, they're doing great. But the people at the bottom, they're dead. They've been murdered. And in the literal sense, they're going to get murdered too. This whole thing is going to turn around in a massive way. And again, when we get this meltdown in the debt market, which is going to happen, it's a matter of time. I believe it's going to lead to a resource problem on a grand scale, and there's going to be pandemonium in the streets around the world, not just here in the United States. People better be ready at every level for this, because that's how bad it's going to be, in my opinion.
BRICS has been actively working to diminish the influence of the U.S. dollar on the global stage through various initiatives. Their de-dollarization efforts gained momentum last year as they began persuading developing countries to conduct trade in local currencies. The objective is to prioritize local currencies for cross-border transactions, bolstering their economies. Gregory Mannarino perceives the rise of alliances like the BRICS as a significant threat to the dominance of the U.S. dollar as the world reserve currency. He warns that this shift in power dynamics could potentially lead to geopolitical tensions akin to those seen during World War II. Russian President Vladimir Putin has echoed sentiments aligning with BRICS's de-dollarization efforts, suggesting that the Middle East's oil sector holds the potential to undermine the U.S. dollar's supremacy. Putin has hinted that oil producers could collectively challenge the U.S. dollar by refusing to accept it as payment. Let's get back to the interview.
I think this is obviously a clear threat to the dollar as the world reserve. The BRICS alliance here, and it's what are they calling it these days? Like almost like the evil axis or whatever it is. The anti-American axis. It's interesting the wording that's being used here, almost like World War II. Does that sound familiar? The Allies versus the Axis powers. Look, this is going to lead. I've been telling people we're going to see war in 24 was another one of my themes at the end of the year. We were going to see war expand and the funding for wars expand. We're seeing it all right now. And again, the job here of, let's say, the Federal Reserve is to, or the goal here is to maintain the world reserve in whatever incarnation may come down the pike here. And they will defend that with military force, nuclear if they have to. They will kill whoever they have to do it. This is a serious problem, and it's a direct threat to human life on this planet. But people aren't being told the truth. They've been so indoctrinated. People, this. I don't got to tell you, you're in the same boat as me. They don't get it, and they're unable to see things that are just so in their face because, I guess they've been indoctrinated or whatever it might be. I hate to say it, but it just seems like today I've never even dreamed that we'd be in the spot we're in right now by any stretch of my imagination. But the more I look at it, the more we look at it, it just seems like it's rapidly deteriorating. So what does that tell me personally? It tells me that we got to be close to something big. And I think it may be in 25 after the selection. I'm getting myself really ready for that. You always got to have the high ground. So if I feel like I think something big could potentially happen after the presidential selection, we better be ready because this thing here, they're looking for control. They want widespread mass social unrest. They want an excuse to steal people's freedoms and liberties, and they're going to give people just enough rope to hang themselves, unfortunately, and they're going to take most of us with us, unfortunately. That's how I see this going, man. It's terrible. For people that are in the market like myself, I just look at risk, and And risk is fluid. In other words, there's not any set drawn red lines in the sand here. When I put together my MMRI, I did color codes there, which tried to outline where we are. Right now, we're in a high risk zone. Above 300, according to the MMRI, would be extreme risk. But you have to see how the market is responding to it. Like right now, we have a 10-year yield 4.3 and change, but the market's okay because the market realizes, as I do, that more easy money is coming in the form of rate cuts, which will begin, in my opinion, June. We're going to start to see that. I was initially saying May, but it looks more like it'll be June. I don't think it's going to be May. I doubt it. And the market, that's why the market keeps going higher here on the back of promise of more easy money. So watch risk in the market. And it's never wrong. Like, for example, me. All right. As I look at things and the way things are unfolding and watching the big money, what they're doing, trying to get out of this market, I think, it would be prudent for people to consider pulling out. Like, I'm going to say there's an extremely high probability that right before the presidential selection, I will pull out of here. And in the worst case scenario that the market goes up, just get back in. You lose nothing. But in the event that the market would take a big hit, you're safe for a little while, and then you can try to get back in here. Of course you can. It's easy, but always have. And then in the familiar, you got to be diversified, man. You got to have, again, gold, silver. My favorite asset on this planet is silver. You know that. I've been telling everybody this since I started. I look at things like the Dow gold ratio, gold silver ratio. I think people need to be, musical instruments, artwork, classic cars. You got to be, if you have the ability to do that. If you don't, and you had to pick one thing, that's it. That's it to me. Silver. Physical silver is just insanely undervalued right now, in my view.
Ambassador Anil Suklal has emphasized the shifting landscape, asserting that the era of a U.S. dollar-centric world is coming to an end. He suggests that the current global trading system is multipolar, hinting at the imminent decline of the U.S. dollar's dominance. How governments, central banks, and international institutions respond to these challenges will shape the trajectory of the global economy in the years to come. Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.